and good morning to Dave Schurman of FirstOntario Credit Union, back for another edition of Finance Friday, answering more personal finance questions sent in by our viewers. Good morning.
Good morning, Sylvie. Glad we got it straightened out. I think Bob must have pressed the wrong button there. You have to keep him away from the controls.
It's always Bob's fault. All right, well, let's get into Kim's question. Dave, there's a lot of hype about reverse mortgages. I thought about it, and due to the tight finances and decided against it. I was afraid of losing too much of my hard-earned money. Interest rates on them seem to be very high. What do you think about reverse mortgages? So that was from Kim. Now, Dave, I know it's a big topic, so for those viewers who aren't aware of how a reverse mortgage works, let's start with the key features and benefits.
Sounds good, Sylvie. Well, reverse mortgage is really exactly what the name sounds like. It's the reverse of a conventional mortgage. So with a conventional mortgage, you generally take it out younger in life. The rates are fairly low, and then you pay the payments during the time that you're in the house, and you build equity in the house. With the reverse mortgage, it's the opposite. So you can't get one until you're later in life. In fact, the minimum age is 55 years old. And even at 55, you can only get a small percentage, about 15% of the value of your home, where at the conventional mortgage, you can get 95% of the value of your home. You can get up to a little over half of the value, about 55% of the value of your home from a reverse mortgage at the maximum, but you've got to be over 80 years old in order to get that. And the big key, of course, is you're not paying payments.
So why would you want to do this? What are the advantages of taking out a reverse mortgage?
Well, the advantages are really slim. First of all, there's no income test. Because of the fact you're not making payments, you don't have to prove to the reverse mortgage company that you can afford the payments, because generally you're not going to make them. So that's a big advantage. You can take the money in a lump sum or in installments, but that's the same as a regular mortgage. You can stay in your home, and that's really the big advantage that they show you on the commercials. You see Kurt Browning or Tom Selleck, holding hands, walking through the woods, saying you can stay in your home forever. But again, it's kind of smoke and mirrors on that one. So, you can stay there until you die or until you move, but at that point, the house has to be sold.
Right. So some advantages, disadvantages, though. What are those?
Well, the disadvantage, the big one is, again, you're not paying payments, but the rate is really, really high. I know rates have gone up recently, but the 5-year rate on a conventional mortgage is about 3.5% to 4%. On a reverse mortgage, you're going to pay 7 or 8%. So it's about double what it would be in a conventional mortgage. There are penalties if you pay it off early. But the real big one, again, besides that high rate, is it's kind of the reverse of the magic of compound interest. I talk about the magic of compound interest when you're making an investment, so you get interest upon interest. Well, with a reverse mortgage, because of the fact you're not making payments, interest is adding on to interest. So it very quickly eats away all of the equity, the hard-earned equity in your home. And in fact, I've got an example there, if we could throw it up on the screen, just to show how that equity is eaten away.
Yeah.
So if you look at, this is somebody age 70. So if you take a $75,000 loan out on a reverse mortgage, the rate is going to be about 6.5%. And in 15 years, you're going to owe over $100,000, about $115,000 in interest. So that $75,000 is quickly going to turn into about $190,000. Now, on the other hand, if you take out the maximum you could borrow at age 70 on a reverse mortgage, that's $225,000, which is 45% of the value of your home. Let's say this is a $500,000 home. The rate is almost 8%. And then the interest on that, if you look at that, $430,000 in interest. So by the end of 15 years, you're still only going to be 85 years old, and you're going to owe over $650,000.
Right.
And you've only borrowed $225.
All right. Well, thanks so much, Dave Schurman, on another Finance Friday. And you can email your questions to financefriday@firstontario.com. Thanks for joining us.
Thanks, Sylvie.